Hello, everyone. I hope you can all hear me. We'll start the webinar in a couple of minutes. Just want to give people a bit of time to join. Can someone confirm in the chat if you can all hear me? Ah, perfect. Thanks, Dorian. Appreciate it. I'm on my own on this end for now. So great to have the confirmation. Thanks a lot, everyone, for joining. I'll give it another minute before kicking us off. Hello, Sarah. Thanks for joining us. I'll give it another minute before I kick us off.
All right.
All right, great. Hello, everyone. Thanks a lot for joining this webinar. I'll kick us off right away with a bit of an intro for those of you who are less familiar with this webinar, though I'm seeing quite a few familiar names in the invite list or in the attendee list. My name is Oliver Reynolds. I lead market insights and data work streams at GOGLA. And the purpose of this webinar today is the launch of the latest round of our Global Off-Grid Market Report, which looks at data reported by GOGLA affiliates over some sales and impact data of GOGLA affiliates. We've mostly focused on what we call solar energy kits, which are solar lanterns and solar home systems, and a set of key off-grid appliances, including fans, TVs, fridges, and pumps. When we say GOGLA affiliates, so these are essentially the companies that report data to us. It's a mix of GOGLA members, companies selling Verisol certified products, and essentially companies participating in certain programs such as the Layer program. This work is being done for the last 6 years in close partnership with Efficiency for Access, and we thank them a lot for that partnership and with support from the World Bank ESMAT UK Aid and the IKEA Foundation. Another kind of useful elements of context to understand the data we're looking at today. So the companies that report data to GOGLA are classified as either manufacturers or distributors. What we mean by that is manufacturers as companies that essentially have their own branded products, and those are the sales that we track rather than the sales of distributors, which are companies that essentially then redistribute products from other companies' brands, essentially. So we're kind of looking a bit higher up the value chain when we look at this data. The report is, you can see the cover on the right-hand side, is already live on the GOGLA website, so you can download that there already. You might see that one or two panelists have already joined. I can't quite see my screen anymore, so I'm not sure, but I'll introduce them a bit later in due course. So before we get properly started, let me do a quick poll to know who's on the call. And that is if I can remember how to do this in Zoom. Let's see. Yes, I think I've done it. So quick poll to basically get a sense of who's on the call. Do you identify more as essentially a company and industry member or a member of the industry selling kind of solar lanterns and solar home systems or even solar generators? Or do you identify more as a company that does appliances and so on? So investor DFIs, development partners, government agencies, consultants, including those working for the above, and then researchers, whether academic or not totally academic, industry associations, and other. I see it's coming along nicely. I'll give it like 20 more seconds for people to fill in, but we're quite close actually to having everyone. So let me end it there. This will give you, I think, if I can share results, give a sense of who's on the call. We have quite a lot of companies on the call today. Most a third, more than a third of the respondents, 40% of the respondents are actually companies with a primary focus on solar generation. And the rest is kind of a mix across quite a few industry association people. To be fair, we do have speakers from GOGLA joining me on the call, so that's probably why. Great. Thanks a lot for playing along. I'll close that one and move us on. Let me see. Here we are. So let's dive in. These are the global highlights from the latest round of data collection. So what do we see? So essentially the chart on the left is kind of the global sales of lanterns and solar home systems grouped together. What we see is like 10.2 million units have been sold in 2025, and this is the highest that we've ever recorded for a single year. This has several drivers and there's several trends underneath this. I'll try and get to a bit of that in this webinar, but I really encourage you to also dive into the report because there's quite a lot of market-specific dynamics, and this webinar is quite short, so we won't go into tons of markets. So what we see essentially behind this record number is a mix of things. So we see, and you can see that on the chart in the right, so multi-light systems, which are essentially like very entry-level solar home systems, and solar home systems are doing particularly well overall. It's the first time actually that these product categories are as high as solar lanterns, which are also decreasing. So I'll get into those two dynamics in a second. What's not on this slide, and is kind of correlated, is that pay-go sales have caught up with cash sales. So those have also kind of reached an equal footing in the data. It's basically 5.1, 5.1 as well. And that's not a perfect overlap with the product categories because we also have non-negligible pay-go solar lantern sales. So what's underneath this, and I'll get into it a bit more in the next slides, but basically one of the factors is that we're seeing quite a lot of subsidies that are dispersed through result-based finance. A lot of those kind of go through pay-go companies, and a lot of them are kind of focused on, let's say, tier one energy access, which generally fits to multi-light systems and small solar home systems. So those are kind of defined as like the entry level energy access solutions. And so we're seeing part of the market kind of move towards these types of products, especially in sub-Saharan Africa. Trends outside of Africa are different. What else to say here? So on the lantern side, maybe what we're seeing is obviously cash sales, which are mostly lanterns, have taken a bit of a hit. So there's kind of multiple factors behind that. One is a bit structural, which is that historically there's been a lot of lantern sales in South Asia, and that market has kind of peaked. There's still a key role for solar and decentralized solar there, but not maybe the types of traditional lanterns and solar home system that the GOGLA data tracks. So we've seen that kind of structural change. And then more recently, there's been quite a lot of reduction in some of the programs that buy or support solar lanterns. There are some solar lanterns included in some of the recent RBFs, but it's quite rare. What we've seen, though, is kind of with the disappearance of USAID and kind of the scrambling to reorganize humanitarian aid. Following that, we've seen a big decrease in humanitarian sales of solar lanterns. So we always had sales in the MENA region, in certain markets where we know that humanitarian is a key consideration in Africa as well. That is a bit masked. It's a bit harder for us to see, but definitely like in the MENA region, even in a country like Ukraine, we're seeing kind of a decrease in those sales. And other programs that are not humanitarian, that are not humanitarian aid, but still kind of like development slash aid, have also been kind of either delayed or cancelled. So we're seeing that effect as well, at least anecdotally from companies that are kind of focused on those segments. So I've gone into this a bit already, but let me quickly talk about regional trends. I won't go back on all of them. I think the key thing to remember, East Africa, by far the major driver of sales in total volumes. It is growing. This is a lot of growth driven in some markets by these RBF programs and a lot of kind of mid-sized East African markets, Uganda, Zambia, etc. And kind of stable growth in Kenya, but we will discuss that a bit more later. And the highest kind of relative growth in Africa is in West Africa, and that's also Nigeria picking up speed again. And once again, we'll talk about that in a few minutes. Maybe one interesting thing to know, we'll I think some of you might be surprised by how small the Southern Africa sales are. Just to note that that is also kind of a methodological factor. Our definitions of regions within Africa is based on the United States Statistics Division, and a lot of countries that you might consider to be in Southern Africa are actually in East Africa. So like Zambia, Malawi, all those markets are actually considered in East Africa here, which makes Southern Africa relatively small. It mostly has South Africa, Eswatini, Lesotho, Angola. Actually, Angola, I'm not even sure. So then Namibia and Botswana. So there's not a lot of major markets in this definition of Southern Africa. Um, I won't talk about the other markets here. If you're interested, there's more information in the reports, but also these markets are less mature, a bit more spiky. There's less to say about kind of deep trends here. On the following slide, what we have is the impact, how this translates into impact. So this is the number of people currently benefiting from improved energy access. So essentially it's new additions net of people who would have been considered to lose access over time. We're about 150 million in our estimates. One thing we are doing though in the background that hopefully will be rolled out in the data next year is updating some of our core assumptions underneath these impact metrics. And in the case of this one in particular, one of the key things that we are overhauling is our estimates of how long these products remain operational. Right now, our estimates have been very cautious, but we're seeing data come out from the industry. Some of you might have seen Delight's announcement that they're increasing their warranties to 5 years, and we've seen kind of other data inputs from other players that show that actually some of these products are lasting longer than we thought. So we're in the process of revising some of the underlying assumptions and trying to also expand our standardized metrics for the industry to also better include economic impacts and productive solutions, and also solar generators, which is an increasingly important segment for companies in our space. You won't see any data on solar generators in this presentation because it's still kind of new to our data, but there are some numbers available in the report for those of you who are particularly curious about that. Final slide on like global solar lantern and solar home system sales. So what does this all mean for the companies in our space? So we've said like there's biggest sales ever in terms of total volumes, but actually the market has been reshaping quite a bit since COVID. What this slide shows is not, maybe it requires a bit more kind of explanation, but essentially each of these bars represents one company that reported data in 2021 and 2025. And the value associated is the compounded annual growth rate, so how much it grew on average per year over that period. I think and this is only manufacturers as defined earlier. And so I think what's interesting to see is that we went over this period, yes, the sector overall in volumes has grown, but actually it's with a small number of companies doing well and many other companies struggling. So what we're seeing essentially is market concentration driven by multiple factors. We've seen companies pivot, do something else. We've seen companies exit, go out of business. We've seen more and more mergers and acquisitions in the space, and we've seen a growing concentration of capital as well. So increasingly, we're kind of seeing two tails within the sector. Yeah, but essentially that's kind of the key point here. And yeah, I think my colleagues from the Access to Finance team will probably also be sharing some investment data publicly in the near future, which I think will tell a similar story. Moving now to, let me keep an eye on time, appliances. Global level appliance sales. So what we see here is TV sales on the left. So we see a bit of a cliff between 2023 and 2024. Part of that is linked to participating companies changing, but it is also linked to companies kind of deprioritizing TV kits a bit. So we've seen kind of a mix of factors there. So slightly overstated in the data, but still overall, it's not the segment that's growing the fastest at the moment. On the right, what we can see is global fan sales. I think here what's most interesting to see is that now, so there's a mix of sales of fans in kind of West Africa and South Asia as the biggest drivers. And at the moment, what's interesting to see is kind of Nigeria being a major driver of global fan sales and global off-grid appliance sales in general, whereas maybe even just 4 years ago, I think TV sales in Kenya would have been one of the biggest drivers of the overall kind of appliances. Looking next at, if you'll let me change, yes, productive appliances. So here, I mean, with productive appliances, it's a bit tricky for us from the data perspective. It's still a very nascent sector. There's very few large companies. So changes in participation or changes in performance of like one or two companies can have significant changes on the overall market trends that we're able to share. So, but overall, I think what we're seeing and what is true, despite the caveats that I've shared, is that we're not kind of seeing the kind of pure reaching scale growth that we're kind of hoping to see. Um, Sorry for the acronyms here. RU refrigeration units on the left and solar water pump sales on the right. Nothing, slight decrease in sales, nothing dramatic, but also not the kind of growth that we hope to see. On the left-hand side, it's also worth mentioning that one company that had reported in the past and was doing relatively well, which was Churchill, obviously also went out of business a couple of years back, and that also explained the trends there. So now that we've covered a lot of the global bases, let me jump in to East Africa. On East Africa, so overall, you can see major growth in East Africa. As mentioned previously, we're seeing kind of the RBFs in several kind of mid-markets, really driving sales. So, I mean, in Uganda, Tanzania, Malawi, Madagascar, Zambia are all doing really well. Not all of those are completely RBF driven, but in many of those. We've also got an interesting phenomenon in like Ethiopia / the Horn of Africa, where there's much more kind of lantern sales, but it's also really spiky, linked to kind of programs and bulk purchasing. And 2025 is actually also a good year from that perspective. So it's kind of a double effect that's positively affecting growth in that region, which once again is very broadly defined to include countries in southeastern Africa as well. What else can I say here? So I mean, East Africa appliance sales very driven by TVs. There's also solar water pumps in there, but it's not a big. We don't have big markets for fans, for example, in the region. Most companies who provide solar home systems that include appliances are providing TV kits. Um, yep. Let me move to the next slide. So I'll focus on two markets that are quite different, that tell two different stories. So Kenya, on the one hand, the most mature market for off-grid solar, or at least for solar home systems, across the continent, still growing, moderate growth, resisted really well through COVID, and has proved kind of resilient and stable, so really showing signs of maturity. On the different aspect, we have Rwanda, which is a very different market that's very kind of highly regulated. There's been a lot of kind of subsidy programs which have done a lot to kind of expand energy access. They were very targeted, so also really trying to focus on reaching specific socioeconomic categories. But one thing that we have seen is a bit of a stop and go, well, actually a real stop and go effect. We particularly saw it in 2025, where essentially the pause between one program and the following one essentially led to a pause in sales or in orders from distributors to manufacturers. The second half of 2025 actually saw sales pick back up, which tells you how low they must have been in the first half, given that it's significantly lower overall across the year. But yeah, essentially there were very, very few sales in the first half of 2025 as the market readjusted to the different like eligibility criteria and program definitions, and so on. I'm now going to see if my colleague Walter is on the call. Walter, I can't see the kind of Zoom window anymore. Are you there?
Yes, I'm here.
Excellent. Great. So hello. So hi, Walter. So for everyone, Walter Kipruto is our East Africa regional representative at GOGLA. And I'm hoping that he can help shed a bit of light on some other dimensions of what's happening. Walter, on the previous slide, I was talking about Kenya. Obviously, we're seeing Kenya continue to grow. It's generally seen as the most mature market in the region. What do you think is still kind of driving growth? We sometimes hear fears that some of these markets may become saturated. What do you think is driving this? Are there, is there expansion? Is there product replacement? Are there programs that are supporting the market? What are you hearing from, the market and our members?
Yeah, thank you, Oliver. So a bit of insights from Kenya, and as you rightly say, I think Kenya is the most mature market. This is where most of the companies started pitching and starting their operations, especially when small solar or plug and play solar kits, high quality, started being promoted almost 15 years ago. So there are some underlying facts that makes Kenya to sustain the current performance you just saw. One is that there has been an investment in establishing last mile distribution channels. And so there was a lot of programs, TA, from development partners that supported companies to penetrate into last mile and be able to set up sustainable systems that reach customers. And with that, actually, coupled with a high level of consumer awareness. So it's really, I remember when I joined this market, those days, the focus was eradicating kerosene. And I don't think you can barely get people using kerosene for lighting in Kenya now. You rarely find them. Of course, there are some limitations. So there are some underserved regions, especially if you go to the northern parts of the country, where business environment is not conducive. So these regions are still underserved. So even though there are programs like COSAP, which just ended last year, that was trying to really support companies to venture their operations. They are providing subsidies. Yeah, I think beyond the market development, I think Kenya has been one of the countries that has probably not benefited from huge subsidy programs. And most of the cities were going to supply side market development support. So which demonstrate that if incentives are targeted at the right, I would say, issues, then the market can be sustained in the long term. So what we see driving the market right now is consumers are moving up the energy ladder. So you buy a lantern today, you want to buy two or three because one is not sufficient. So you buy multiple products. You also want to get more energy services beyond lighting and basic electricity services. So people are moving up the energy ladder, but you also find the multiple purchase. The population is also growing. In
I think we've lost Walter.
those areas means the need of can demonstrate, and it's an indicator of sustainability. Once these products have a certain end of life, so what is happening is that people are actually buying. So as the more the products are getting into the end of life, they are either upgrading, getting more, or replacing what they no longer work. So in a nutshell, I would say I think Kenya has been so there has been support from grants and subsidies and technical assistance, but it has gone to the right elements, basically building the market. And like other countries where probably you would see spikes of sales during a certain period of time and then it goes. So for Kenya, it has always been consistently going up. But also we can maybe summarize also that I think the economic situation for the country is also an enabling factor for people to continue access and have the ability to pay for these products. Thank you, Oliver.
Thank you, Walter. If you stick around until the end, I might see if I have another question for you at the end, but just to make sure we have time to kind of cover everything, I'll move on to West Africa for now. Thanks a lot, Walter. So, West Africa. I'll try to be concise here as well. So, West Africa sales are mostly driven by Nigeria. Nigeria, under the Nigerification program, and now theirs has really kind of taken off from being a underdeveloped market, maybe 6, 7 years ago, to kind of making it into its own position. I mean, given the size of the market and its population, it's not surprising, but it took time to get there. So I won't really comment much on what you see here because, as you'll see when I change slides, it's basically almost no difference in trends between West Africa and Nigeria. So I'm going to change slides now. And here we are. This is Nigeria. So essentially, Nigeria completely driving the regional trends. Other markets that have, a relevant amount of sales include places like Benin and Togo, to a lesser extent, markets like Senegal, Cote d'Ivoire have been kind of active for a long time, but we're not seeing huge amounts of sales there. As we mentioned, kind of a key driver in Nigeria has been the Nigeria Electrification program, where most of the sales kind of occurred between the second half of 2021 and the first half of 2023. So we kind of see that in the data. After that, we see a bit of a dip that is in part this kind of transition of programs, but also undeniably kind of Nigeria went through major inflation, forex changes, etc. On the right-hand side, you see the appliance sales. And as I mentioned before, that is largely fans driving the volumes. There are sales of all other kind of appliances in the Nigerian market. There is demand for fridges and cooling and pumps and TVs, but the volumes overall here in the data are driven by fans and the large demand for like space cooling here. But I won't go into more detail in Nigeria, and hopefully I haven't already kind of covered too much of what my colleague wanted to say, because we'll now hear from Sarah Juku, who's the West Africa regional representative for GOGLA. Sarah, if I think I can't see you, can you just confirm that you're still there and that your connection is okay?
Yes, I'm here. Hi, Oliver.
Excellent. Thanks a lot, Sarah. So just to ask you, I mean, I've just mentioned as Nigeria has formally kicked off. Can you kind of share some insights from our member and from on the ground of like what's happening right now in Nigeria?
Fantastic. Thank you so much, Oliver. I'm happy to be here. Happy to see some familiar faces attending. So in terms of what's happening, generally, I'm going to speak on the positives and negatives based on feedback we've gotten from our members. Generally, members are satisfied with the program so far. Prior to even joining the program, what a lot of our members did was revamp their sales strategy, revamp their credit strategy, and see how to really tap into the DES program and get a lot from it. And a lot of that stems from experience from the NEP. So the Nigerian Electrification Program, point one, that happened between the years 2019 from 2019 to half of 2023, like Oliver has mentioned. So there were a lot of lessons learned. A lot of companies were disappointed by the abrupt start of the program. So when theirs was coming up, there was a lot of thought being put to strategy. So sales have generally picked up from last year. Companies planned, like I mentioned, to up their sales, plan to improve their credit, and it's really helped in terms of operations in the country. Also, with expansion, we've seen that a lot of our members are moving into the areas where the incentives for sales are higher. So it's kind of incentivized expansion into I'll call them red zones in Nigeria, which is the core north. So you find that the rebates you get for each sale you make is about 3 times the amount if you sell in an area that is pretty much categorized by having a high electrification rate. So this has really helped a lot of our members to expand. That has also had a ripple effect on the sales outcome. Organizations are also thinking about credit. So they are looking at tied to the incentive of sales, there's also the incentive of credit with the DES program. So it helps them to improve their credit strategy. So how are they selling? How are they making sure that the benefits of these systems go beyond not just making the initial sale, but the customer is able to continue paying over a long period of time so that they can get the full benefits of the DES grants. And this is really, it has shown in terms of results of improved credits, reduced default rates from customers. And it's really shown that the companies are really using the strategy of the DES program to expand their operations and improve their operations. In terms of warranty as well, I really love the example that Oliver gave because it speaks true to what's happening on the ground. So organizations have expanded and improved the warranty services that are being offered to end users, which is fantastic. As much as where possible, they're going beyond the 1 year, typical 1 year or 1.5 years warranty to even up to 5 years for the bigger systems, which is fantastic. They're increasing end user sales points. So service centers are expanding, they're multiplying, they're giving better service because the REA, the Rural Electrification Agency, which is the administrator of this grant, is holding each company accountable for the kind of service and the warranty that is being offered to end users. Organizations are also expanding their product lines. So typically you find before the systems that were being sold were just tier 1 to tier 2. Now organizations are looking beyond and seeing how they can even bring in productive use. That is really changing the scope of things, the scope of work in terms of expanding commercialization and improving industrialization in the country. So you find that the story on productive use of electricity is really growing here in Nigeria. Solar generators is booming, it's becoming a big talk. A lot of people are looking into it. A lot of people, developers are bringing in the products, consumers are tapping into the product, and it's really expanding use. Product quality is another big thing. The DES program will not accept products that have lead acid batteries. So everyone has changed their strategy. Products are coming in with the right certifications from Verisol, product certification from SON, that's Southern Organization of Nigeria, and they're making sure that the correct products with the right installation is being done at customers' sites. On the negative, customers, members are still complaining about delays with payments. So we find that from the period where you submit for claims to the World Bank or to the REA, it takes a couple of months before they get the funds. So they've complained about that a bit, but I know that from feedback from the REA, that is being worked on. It's typically just a bureaucratic thing, and members are looking at how to restructure and plan around those delays with inflows. We've also seen that distributors are not able to earn from these programs, right? So the program restricts distributors from earning directly. So what is being advised is for distributors to work with retailers so that they can get or share whatever claim that comes in. So I think that pretty much covers it. Generally, the program is also much more transparent than the NEP phase. They have regular meetings as well, and a lot more accountability is required from members. So it's been good so far, and we're hoping for improvements. Thank you so much.
Thanks a lot, Sarah, for this deep insight into the DARE program and what we're hearing from companies on the ground. Apologies if you hear noise in my background. Fun fact, there's a massive thunderstorm just starting where I am in Amsterdam. So if you see flashes or hear hail knocking against my window, that's quite possible. I hope you can hear me clearly throughout.
Yes.
Excellent. And hopefully the light stays on. So I'll finish us off with South Asia. Sarah, stick around. If we have time at the end, I might have another question for you, but I want to make sure I talk briefly about South Asia and then give a tiny bit of time for Q&A. The aim is for this webinar to only last 45 minutes. However, if there's a lot of interest in the Q&A, we can potentially make it a tiny bit longer. South Asia. So I won't spend too long on it. Overall, it's a kind of structurally declining market for the types of products that we track in our sales data. You can see that on the chart on the left-hand side. Solar home system, solar lantern sales have been steadily declining. There was a bit of a rebound post-COVID, but I mean, in 2017, 2018, India was the largest kind of off-grid solar market in the world, ahead of Kenya in total volumes. That has changed. Obviously, electrification through the grid has been pushed significantly in Bangladesh as well, where there was kind of a transition via the kind of EED program to solar home systems and then the grid. But there's still quite a lot of room for solar DRE, rooftop solar, solar generators, backup portable lighting are still kind of all in need. It's just that the market has shifted away from the solutions that we track in the sales data, which are more key in Sub-Saharan Africa, and South Asia has moved to other models. On the appliance side, most of what you see here is driven by fans and solar water pumps. I won't go into too much detail because we also know that in South Asia, much as what I said for productive use in general, part of the limitations are linked to who we're able to collect data from, and that's even more true for South Asia than it is for Sub-Saharan Africa. So there's a lot of up and downs here that are linked to the companies that are able to participate and share data on fans in particular, which are I would say overall fans have tended to be the largest driver of South Asia appliance sales. So let me see if there are any questions. I think I saw a couple in the chat. I also see there's one, I think, in Q&A. Okay, I think it's the same one in the Q&A that's in the chat. So let me go back up. Alistair, I see my colleague Sarah has answered in the chat. Maybe, I mean, we don't typically share that information publicly. An imperfect proxy in our reporting would be that we have the solar lantern category split into two, at least at the global level in the report, which kind of shows 0, 1.5 watt peak and 1.53 watt peak. It's not a perfect indicator of what has phone charging and not, but obviously most of the 0, 1.5 watt peak solar lanterns are really task lights. Whereas in the 1.53, you'll still have some task lights, but you're also starting to see solar lanterns with charging capacity and so on. Jean-Claude Burundi, on the solar lanterns. So I don't think there's necessarily been strategies from companies to reduce solar lanterns. I think far from it. I think there's huge demand for solar lanterns, even in markets that have grid access to some extent or mini grid access. There's often public places, roads, etc., are not always lit up at night. So there's still a huge demand for solar lanterns. I think what we are seeing is that the drive of programmatic interventions is more towards entry-level solar home systems, and that is probably eating away at some of the competitors of lanterns in some markets. And then we're seeing, as mentioned before, kind of humanitarian aid being chipped away on kind of access, electricity access for kind of refugees and so on. I would say for solar lanterns, I think often there's a tendency to want to control the solar lantern market because we know that there's a lot of kind of non-quality verified products that are not durable, low quality, don't last very long, and that can be an issue for both kind of like customer trust in solar, for just generation of e-waste. And so I think that's why, quality certification, the Verisol quality standards, the IEC standards are all really important. There's a real difference between the quality of products that are certified and those that are not. There can be some good products as well that are not certified, but the safe bet is certification, which guarantees kind of a degree of sustainable use. I'm just going to go through the questions in the chat for a bit. So there's another question, Alistair, from you on energy kits and appliance sales. So I think there's a lot of kind of entry-level solar home systems being sold, which are not necessarily bundled with appliances, as most TV kits tend to be at least 30 watt peak systems as a kind of minimum, but actually more often 50 plus watt peaks, and those sales are lower. Obviously, fans can be powered by smaller systems. Radios can be powered by smaller systems. Fans we see in West Africa are quite popular. We also see hundreds and hundreds of thousands of radios sold, but we don't kind of track them in a formal way. So that's kind of hidden. And then obviously there's all the kind of, in some cases, the ability for people to kind of plug in a DC kind of cheap DC fan or other, or even just charge your phone. And that is not right. And then part of it is methodological. Some companies are really kind of better at reporting some of the solar home systems than they are the appliances. So there's a tiny bit of methodological loss, but I would say it's still the main effects. We're seeing a lot of growth in the solar home systems coming from smaller systems. If you're asking if this presentation can be shared, I believe it will be shared with all registrants. So yes. Dorian, how close are we going to get to the M300 goal by 2030? Um, it depends which goal we're talking about. So I think there's universal access SDG 7 by 2030. There's M300 World Bank AFDB goal of connecting 300 million people. And then there's the compacts from the countries, which have their own goals for 2030. In some cases, actually not for 2030, but for just after. And they all have slightly different target lines. I think there's a chance that off-grid solar could contribute significantly through this growth rate to the kind of M300 SDG 7 objectives. I think our analysis 2 years ago was the World Bank on the market trends report, which was published in 2024, which was led by Dalberg, kind of showed that based on some of the least cost access in measurements, off-grid solar is best placed to participate at like 45% of those connections. So yeah, I think off-grid solar can have an outsized role in kind of accelerating this. But we also need grid expansion and mini grids to roll out. And obviously that's by definition slightly slower. So it'll be great to see how all three solutions can play that role side by side. And Jean? So Jean, to your question on the CAGR slide that showed some companies really growing, some not so much. Well, I've seen the sales kind of shrink on average in 2025. That is entirely based on solar lanterns and solar home systems. So solar generators weren't taken into account in that slide. Solar generators are kind of new, not as a concept, but kind of new for a lot of companies in our space. There are more recent additions to product portfolios, especially in Africa. It's more of a new growth lever. I think we've been collecting sales data of solar generators for 2 years, so 2024 and 2025. I think we've recorded something like 80,000 units sold in 2 years. That is because we're kind of still building up our capacity to capture the data. So it hasn't been like one of the major drivers in the background. Alistair, you have a definitional question on multi-light systems and solar home systems. So multi-light systems are in our system basically systems under 11 watt peak. So the definition is capacity based, but the idea in when these were defined a decade ago or more or less was to indeed kind of create a separation where multi-light systems are products that, unlike solar home systems, kind of don't really power appliances in a meaningful way. So I would say that's the kind of the definitional background. We're about to run out of time. I do have a couple more things I would like to say. I'm sorry, Sarah and Walter. I won't have time to ask you an additional question, but I really thank you for no worries, Alistair, for joining the webinar and for sharing your insights. What I would like to do before we end, don't all run away right away. I've got a very quick webinar that, once again, if I don't struggle too much, sorry, a poll that if I don't struggle too much, I should be able to launch. How does one do that? Let me see. All right, got it, I think. So, well, people vote on that. Just kind of quick feedback. I would like to also take the opportunity to quickly plug the Global Off-Grid Solar Forum and Expo. Apologies for the ugly slide. I remembered to do this quite late in the day. 27th, 29th of October in Kigali, Rwanda. This is the kind of main event of the off-grid solar industry. Over 1,000 people are expected to attend. The website for the forum is already live. It's offgridsolarforum.org, which you can see on the bottom left. Registrations are open. You can also already see some of what's supposed to happen. You can also reach out to GOGLA directly for any information regarding attendance, booths, speaking opportunities, the program, etc. And if you have any other questions regarding the data, the market trends, etc., you can also reach out to me. I can add my email in the chat. But thanks a lot, everyone, for attending this webinar. Thanks a lot for the questions that were shared. Checking that I know how to spell my name. Great, here we are. Actually, wait, it seems I'm only emailing hosts and panelists. My bad. Here we are. Excellent. Have a great rest of the day, everyone, and feel free to reach out. And yes, I think there's a question from Gabriella in the Q&A. Yes, the slides will be shared with all registrants.